India and the United Kingdom are on the brink of signing a historic free trade agreement. It's a deal that's been in works for years and has the potential to reshape the economic future of both nations. But what does this agreement really mean? Will Indian exporters finally get easier access to one of the world's wealthiest markets? Will Scotch whisky and Jaguar cars become more affordable in India? And what about service professionals, SMEs, and the millions of workers in manufacturing? In this video, we break down the India-UK FTA, its key features, the product-level trade impact, the likely winners and losers, and why this deal is far more strategic than it looks. Whether you are a business owner, investor, policymaker, or curious citizen, this is your 20-minute guide to understanding what changes now. What is a free trade agreement? A free trade agreement or FTA is a pact between two countries that aims to reduce or eliminate trade barriers like tariffs, import quotas, and export restrictions. But FTAs are not just about goods. They often cover services, investment protections, e-commerce rules, and even visa regulations. India is no stranger to FTA. It has signed deals with ASEAN, Japan, South Korea, UAE, and Australia. Post-Brexit, the UK has aggressively pursued FTAs to reposition itself in the global trade order. An FTA helps exporters become more competitive in foreign markets by removing import duties. It also gives consumers access to more choices at lower prices. But FTAs also come with trade-offs. Domestic industries may face stiffer competition. That's why every FTA negotiation is a delicate balancing act. With the UK, India sees an opportunity to deepen its relationship with a high-income market that's relatively less politically volatile. And for the UK, India is one of the fastest-growing large economies, a key partner as it tries to go global after Brexit. India's past experience with FTAs. India's experience with FTAs has been a mixed bag. Let's take the India-ASEAN FTA. Signed in 2010, it was expected to boost Indian exports. Instead, imports of electronics, palm oil, and steel from ASEAN countries surged. Indian producers, especially in steel and small-scale electronics, felt the heat. A similar story played out with South Korea. While Korean auto and electronics brands found strong footing in India, Indian exports to Korea remained muted. On the other hand, the India-UAE CEPA signed in 2022 was more balanced. It helped boost Indian exports of gold jewellery, textiles, and engineering goods. The India-Australia ECTA also opened new opportunities for pharma, textiles, and IT services. These learnings have shaped India's cautious and strategic approach to the UK deal. This time, India has demanded strong safeguards, especially rules of origin clauses to prevent Chinese goods from entering India via the UK. India-UK trade snapshot. Let's look at the current trade picture. As of 2024, India and the UK traded around British pound 42.6 billion or approximately Indian rupee 4.5 lakh crore. India exported goods and services worth British pound 25.5 billion to the UK and imported around British pound 17.1 billion in return, making this a trade surplus for India. India's top exports to the UK: refined petroleum, British pound 1.3 billion, textiles and garments, British pound 877 million, pharmaceuticals, British pound 667 million, gems and jewellery, auto components, IT services and business consultant. UK top exports to India: non-ferrous metals, British pound 2 billion, Scotch whisky and beverages, British pound 267 million, industrial and medical machinery, luxury automobiles, financial and educational services. What's interesting is that India's exports are both labor intensive and knowledge intensive, while the UK's are more capital intensive. Key terms of the India-UK FTA. While the official text is still under wraps, negotiators have disclosed many of the key provisions. Number 1. Tariff reductions. India will cut duties on Scotch whisky from 150% to 75%, then gradually down to 40%. Import duties on UK luxury cars will reduce from 100% to around 30 to 40%. UK will eliminate tariffs on Indian textiles, jewellery, leather, engineering goods, and organic chemicals. Number 2. Services and mobility. The UK will ease visa access for Indian professionals in IT, healthcare, hospitality, and academia. There will be mutual recognition of qualifications benefiting Indian CAs, engineers, and architects. Number 3. Investment and IP. Enhanced protection for foreign investors. Stronger enforcement of intellectual property rights. Number 4. Rules of origin. Only goods with at least 35 to 40% local value addition can qualify for FTA benefits. This blocks third country routing. Products that will benefit Indian exporters. The FTA gives Indian exporters a golden opportunity to expand in the UK market. Textiles and apparel, tariffs of 8 to 12% will be removed. India's large apparel exporters in Tirupur, Ludhiana, and Surat will be more competitive than Bangladesh and Turkey. With UK tariff 8 to 12% eliminated and level playing field achieved, Indian market share is expected to double 6% to 12%, adding an extra $1.1 to 1.2 billion annually. Leather and footwear, India's MSME in Kanpur and Agra will gain price competitiveness. Pharmaceuticals, faster regulatory clearances for Indian generic drugs will open up NHS procurement opportunities. While no specific India-UK projections were given, continued strong performance and increased market access suggest a likely 10 to 20% rise to $500 to 600 million plus, supported by global generic capabilities. Gems and jewellery, tariff-free access boosts India's competitive edge over Thailand and China. UK jewellery duty reductions could increase India's exports from $941 million to $2.5 billion within 2 years. IT and consulting. Indian firms will find it easier to deploy skilled staffs in the UK. Visa quotas are expected to expand for software engineers, project managers, and chefs. These sectors combined could see a 30 to 50% jump in exports over the next 3 years, with additional job creation in Tier 2 and Tier 3 cities. What will become cheaper in India? Indian consumers will enjoy lower prices on high-end imported products from the UK. Scotch whisky, currently taxed at over 150%, this will gradually drop to 40%. Premium brands will become 30 to 40% cheaper in next 5 years. UK Scotch whisky exports in India with a baseline import value of British pound 264 million, $330 million could potentially double or more. British cars, Jaguar, Land Rover and Bentley models will see a price drop of Rs 10 to 20 lakh, especially in the luxury SUV segment. Import duty reductions from 100% to 10% within a quota for UK automobiles means luxury brands like Jaguar, Land Rover may see significantly increased sales. Packaged foods and cosmetics, chocolates, shortbread, teas and cosmetics from the UK will become more affordable. Industrial tools and medical devices. Hospitals and SMEs will benefit from lower procurement costs. This could stimulate higher import volumes by 15 to 30%. Who might lose out? Like all trade deals, this one will create some friction. Indian losers, local alcohol brands like Amrut and Officer's Choice could lose market share. Auto companies like Toyota and Skoda may struggle in the premium sedan segment. Metal processors and machinery MSMEs may face competition from UK imports. Global competitors, Bangladesh and Vietnam, who currently enjoy duty-free access to UK for textiles, will now face competition from India. Chinese electronics and pharma could lose market share in UK as India become a cheaper supplier under the FTA. The strategic context. The FTA goes beyond economics, it's a geopolitical signal. For the UK, this is about post-Brexit trade diversification. India is the largest economy with whom the UK hasn't yet signed an FTA. For India, the UK is a stepping stone to the European Union, US, and Commonwealth markets. The deal also builds trust for future negotiations like the proposed India-EU FTA and expanded CEPA with Gulf nations. India's trade policy shifting from protectionism to strategic alignment. The UK deal proves that India can negotiate fairly while protecting its interests. When will the deal take effect? The deal was delayed due to elections in both countries, but as of mid 2025, officials from both sides confirm that the agreement is in its final legal vesting phase. It is expected to be signed before the end of 2025. Implementation will likely begin in mid 2026, with tariff phase outs continuing till 2030. Full benefits, especially in whisky, automobiles, and pharmaceuticals, will be visible by 2027. What this means for India's future. The India-UK FTA is more than a trade deal. It signals India's arrival as a confident negotiator and global exporter. If executed well, this agreement could double bilateral trade to British pound 90 billion by 2030, creating lakhs of jobs, and lower the import bill on premium goods. For Indian exporters, this is a call to scale up. For investors, it's an opportunity. For consumers, it's cheaper choices. And for policymakers, it's a reminder global trade is about strategy, not surrender. Who do you think gains more from this deal, India or the UK? Tell us in the comments. And if you found this deep dive useful, don't forget to like, subscribe, and share this video with others who follow Indian business and policy. This is India Business Insights, making sense of the Indian economy, one deal at a time.